Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm Joel Elconin, and on the line I have Annie Logue. She's a consulting analyst and the author of Day Trading for Dummies. Annie, how you doing on this Wednesday morning?
I'm fine, thanks. And how are you?
Good, good. We are coming off a Republican victory in the Senate here, and kind of bodes well, I guess, for the market. S&Ps are trading up 12 and a quarter points. Just made a new all-time high of 2,019.50. Made a new high by a tick there. Annie, what do you think about all this politics?
Well, it's certainly going to make for a good day today in terms of the market being strong. Longer term, of course, it really depends on whether or not the politicians actually get things done rather than the parties of the politicians. And I think that something that traders and investors really need to be careful of is letting their politics start to cloud their investing choices. And what I mean by that is that it becomes just another psychological bias that can really undo someone in the market. Because ultimately, if you look at the data over decades, the market actually does better under Democratic administrations than Republican administrations, but ultimately the factors that drive the market don't have much to do with who's in power either way, right? And I think there's a real danger to thinking that, because Republicans are in power, that means everything's going to be rosy and taxes will be cut and all kinds of great stuff. And so a really extreme example would be some of the people who got so excited about Bitcoin, often because of very strong libertarian politics. And the thought was that, well, we can't trust the government because they're printing too much money and we're going to have inflation, and we can't trust government institutions and they're unstable, and the banks are being supported by, printed government money, et cetera, et cetera. So the solution would be to go heavily long in Bitcoin. And then people suddenly realized that their money was at places like Mt. Gox, where there was no deposit insurance, there was no accountability. And so, of course, now everybody knows don't do business with Mt. Gox, but it was a very painful learning process. That's an extreme example, okay? But I think that a lot of people can get caught up in that, where you start using your political beliefs to convince yourself that something is good or something is bad, regardless of what the actual fundamentals are. And so I think, again, there'll be some excitement today, but I think longer term people need to step back a little bit and say, okay, what really are the fundamentals of the companies? What really is driving the bond market? What really is driving the currency markets?
And what is?
I think what's driving it right now is concerns about, in the U.S., the speed of the recovery, and what's going to happen with retail sales. A lot of concerns about whether or not corporate buyback activity can continue, because that has been something that has helped the stock market. In the bond market, extreme concerns about whether or not these low interest rates are sustainable. And if we back off from quantitative easing and rates go up, then the bond market is going to fall apart, and people are going to find out how risky bonds can be, right? So, and that's going to play out in the futures markets. But I think really the overriding economic factor is the speed of the recovery and what that's going to mean for the job market, that if we get to a normal state of employment, that will be good and create some steady growth. If we reach a point where job growth exceeds the number of workers, then we start entering into an inflationary situation. And so I think that's really, a very slow recovery makes for slow returns, but it also prevents inflation. So is that good? Is that bad? I suppose it depends on whether or not you're looking for a job, right?
Yeah.
Um, I think there's some other political situations where traders can have some great opportunities. An extreme example, but a very good one for currency traders, was what happened in Europe 2 years ago as they worked through the restructuring of the currency there and the restructuring of their markets. But for the most part, politics works at such a different pace than business that it's very difficult to say that you're going to get something done. And that's, again, why I think traders and investors need to watch the convincing behavior, need to watch the tendency to convince themselves that just because they like the person in office or just because they dislike the person in office, that means the markets will be up or will be down. And I think, politics, because you have to get so much buy-in, right? In business, the CEO can make decisions and people have to follow them. And in government, governors, presidents can make decisions, but they still have to get the support of the legislators, the support of the governed, right? We operate by the consent of the governed. So it makes for some complicated situations.
Okay,
Um,
Annie, I've seen you've written some other books here. You've written Emerging Market for
uh-huh.
Dummies,
hmm
Sociable Responsible Investing for Dummies, and
hmm
Hedge Fund for Dummies. Now,
Yes.
I want to talk to you a little bit about the hedge funds and the big money managers here.
Oh, goodness,
Oh,
yes.
yes. And I don't know if you are familiar with, are you familiar? Wouldn't call them a hedge fund, but a managed money management firm, Good Harbor. Are you
Uh-huh.
familiar?
Uh-huh.
Okay. I mean, they were down at the end of September 20%. Down
hmm
20%. And the market was up 7 or 8%. And then you had this incredible move in the market here. I mean, why, big money like that, and also the hedge funds are having really terrible performance. What do you attribute that to?
Well, some of their terrible performance is due to their high fees. And so, performance that might be acceptable once you take out the fees suddenly becomes a lot lower. Some of it is that I think there just aren't as many opportunities to get a really big advantage. And I think that that's something that we sometimes forget, that so much money went into hedge funds under the assumption that the near-term hedge fund was something magical, but hedge funds have access to the exact same assets as everyone else does. They might have some increased access because they can commit more capital or because they have fewer liquidity requirements, but it's not like there's some magic asset class that's available only to hedge funds. And a lot of hedge funds are actually managed to have moderate returns but very low volatility. So they'll often talk about having bond-like returns, but having a consistent 5, 7, 8% annual return, which is very useful for a lot of pension funds that can't afford a lot of volatility, but it doesn't necessarily make for spectacular headlining performance. And I think that this is, some signs of a market that's becoming a little more mature right now, or where we haven't had any really significant drivers to change the economy, or to create a lot of really strong growth. And so people they're kind of running out of ideas. And I think that's, again, the concern about the broader stock market, about, is it just going to be very slow recovery? And I think with the hedge funds, it becomes more of a concern about, is there really any more tricks that they can pull out of their bag in order to justify the fees that they have? And the fact that some of the big institutions like CalPERS are pulling out is a concern. CalPERS has had a lot of funding problems, but those have not really been investment problems. Those have been related to higher benefits and smaller contributions from employers rather than anything that their management has been doing. And
Okay.
so, and I guess to swing back to politics, one of the big concerns that we face longer term is the financial situation of many states and municipalities because of their pensions. And you have extreme situations like California and Illinois, but many states have similar problems, and the problems still have to be solved. And how that plays out, that's going to be a very long-term, slow process that's hard to predict, and that's not necessarily tied to any one party.
Yeah, it's pretty much though. I mean, the market coming back is definitely going to help out for some of those
Oh,
shortfalls.
yeah.
Yeah, because of a lot of those assets invested in the markets. You also wrote emerging markets for dummies.
Yeah.
Yeah, and boy oh boy, I mean. This market, I mean, the U.S. market, I mean, we're kind of ignoring, the perils that are going on in Europe. I mean, you saw
Mm-hmm.
what happened to a stock like, Priceline does a lot of, European business, European travel, whatnot. Are there any emerging markets that, if you want to diversify a little bit out of the,
Mm-hmm.
the United States market, and you're not sure if Draghi is going to be able to pull off his version of QE over there, are there any emerging markets that you think investors should keep an eye on?
I think much of Latin America is really interesting, much of South America. Brazil has probably been overpurchased, overbought, and they're having a lot of financial difficulties because they've overexpanded, had too much government spending for the World Cup and the Olympics. To get back to sort of the broader theme of politics, it's very interesting to see how political situations play out in emerging markets. And one of the ironies for Americans looking at emerging markets is that democracy is not always good for financial markets. If you're just talking about the economy of an emerging market. But I would say Chile is very interesting. Chile has worked out of decades of problems. They're
What
a
was that?
stable economy. Pardon
QA?
me?
Chile. Okay.
Yes.
All right.
Yes, yes. Yes. I've
Okay.
had
I'm
just
sorry.
enough
I didn't hear
Spanish to be dangerous.
Go ahead. Go ahead.
But they've worked through some decades of political upheaval. They have a stable democracy. They have a very strong natural resources economy, which is doing well as you have strong demand for minerals because of growth in other emerging markets, especially China. Right, China's has big scarcity of natural resources, so I think that's a market that's especially interesting right now. I'm not very excited about Brazil right now because I think they're overextended. I think there's some very interesting markets in Africa, especially because of natural resources plays that have been very much driven by demand in China. But many of those economies are still too small for stock market investors. But I think the Republic of South Africa, which is a relatively stable democracy, which has a relatively widely diversified economy, they don't have quite as much natural resources. It's kind of a trade-off. They don't have natural resources, but they do have better developed financial markets. So I think there's some interesting opportunities there as sort of the safe place to invest in Africa. And, to some extent, when you think about emerging markets, sometimes there's ways to play other economies. So, most of the major U.S. multinational firms are seeing almost all their growth coming from sales in emerging markets. And a lot of the Chinese companies, the Chinese petroleum companies are very heavy investors in Africa. So that becomes a very interesting way to play one emerging market by investing in another.
Okay. All right.
Yeah.
What about, boy, what about this gold market here? Gold bugs are just getting squashed.
You
What?
know, I think gold has a little bit of some of the same issues as Bitcoin, which is it tends to be, to a lesser extent, but it tends to be driven as much by ideology and philosophy as by real economic fundamentals. Unlike Bitcoin, gold does have a lot of industrial uses in jewelry and in manufacturing and semiconductors. But what drives gold is the idea that you need some sort of hedge against really bad times, which I think makes for a difficult market to trade because you get removed from economic fundamentals. Right, you're sort of starting to guess about psychology and guess about, people's fears, and that becomes tough to play. If you really believe we're headed for bad times, what you should be doing is taking your money and buying batteries and bottled water and dried fruit, right? Not gold.
Okay.
I mean, if that's what's attracting you about the gold market, beyond that, just trade it off the charts and don't even worry about the fundamentals.
And just since we got your comments on gold there, crude market, boy, that thing is just getting pounded too. Pretty soon, gas will be back at $2 a gallon here. Is there anything that we could turn around this crude market?
A lot of that, you have a couple of interesting factors because you have slow economies in Europe and the U.S. that cuts into demand. Aging populations, very interesting. I did some numbers a while back on the number of automobiles in the world, and actually because of aging populations in the U.S. and Japan and Europe, the actual number of automobiles on the road has fallen very slightly. But, there's a certain age where people can't always drive. So that's part of it. And then you have all this gas coming, or all this petroleum coming onto the market, primarily due to Chinese activities in Africa. So you have this very interesting situation where the supply that's coming onto the market is increasing. And then in the Middle East, you have countries that control the price, but they need cash for a lot of various and sundry extracurricular activities in places like Syria and Iran and Iraq, and that's creating some problems.
And you got a lot of people on the road that shouldn't be driving.
Yeah.
All right,
Yeah.
Annie, I see that you're a graduate here of Northwestern University, and my beloved Michigan Wolverines are going to be playing there on Saturday. Any chance I'm going to see you at the game?
I don't think so.
Okay.
Michigan's probably going to win.
Oh, that's good news. They haven't been doing.
I think we can say that. I think as much as I'm a Wildcat fan, as much as I bleed purple. We're not a football powerhouse, and you know what? That may be okay. When you look at some of the extremes that certain universities have gone to make football powerhouses, like UNC, maybe it's not a bad thing.
Yeah, that's a great way to end this interview. Annie Logue, consulting analyst and author of Day Trading for Dummies, giving us a broad outlook on the market. Thanks a lot, Annie. We hope to talk to you again soon.
You're welcome. Thank you for having me again.
Okay, thank you.